Hi, Chris Hood here with this week's tips. Two tips for you investors out there. I think one of the most important things, if you decide you're going to go and buy an investment property, the best thing to do is to go into this with a long-term plan, so that you have you're thinking not just 1 or 2 years or 3 years or something like that. Try and think at least 5 to 10 years down the track, because I'd see too many people want to try and make a killing in about 12 months or 18 months, and look, those days are gone. At the moment you might be lucky, but really you need to have a long-term structured plan in order to reap the benefits down the track. So once you've decided on your long-term strategy, you need to organise a whole range of things. You need to decide, okay, how are we going to finance it? Where are we going to get the finance from? What entity are you going to buy it in? You can buy it in a company name, or buy it in your own name, or a superannuation. A lot of people buying property in superannuation funds these days. So you need to speak to the right people. You need to speak to your accountant. You need to speak to a solicitor who will be able to advise you on the name structure and the legal ramifications of doing so. But mainly your accountant. And of course you need to speak to a good agent. And that's where we step in, and we can hopefully guide you in the right direction to buy the right property, because you can buy the right property, you can buy the wrong property in real estate. Most investors, we like to get them to look at sort of the mums and dads stuff, things that are going to be easily rented. You don't have to buy something that just satisfies your ego and go and spend $400,000 or $500,000 on investment property. If you spend $500,000, you can actually buy 2 very good properties. So give that some thought. The type of properties, newer properties, 1 to 5 years, you're going to get some significant depreciation allowances, which is always great from a tax point of view. You need to decide, okay, do I want to be positively geared in this property, or do I want to be negatively geared? Once again, you need to speak to your accountant about those things. There are different forms of investments, different types of properties. Do you feel happier with a unit, a house? You might feel, or a 2-storey property, whatever the case may be. They all rent, provided they're clean and neat. If you buy rubbish, that will attract the wrong type of tenants. So, give some careful thought to the term that you want to have this property for. Give some careful attention to the structures you wish to buy in. Understand all the tax ramifications of what you're doing. And think carefully about the property, the type of property that you wish to buy. So there you have it. There's some tips for you for this week. I think I was only going to give you 2, but I think I might have snuck a 3rd in there as well. So there'll be a few of those coming out over the next few weeks that hopefully will be allowed you to build some wealth and have wealth creation, so that when you retire, the whole idea is that you have income coming off these properties, as well as super and shares and all those sort of things, but a bit of portfolio diversification. So anyway, we'll speak to you next week and have some more tips that will help you to move forward in life. Thank you.